Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, June 3, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, we can harken back to last Friday. We had what's called in the trading parlance a lollapalooza of a market reversal. She was staring into the abyss. The market turned around, issued a conveyor belt of pies in the face at the end of the week, end of the month. It was what we call a rescue operation to recapture the 20-period moving average. There was a lot of other stuff going on Friday afternoon. It doesn't matter. What matters is price is the absolute. We take it from there. Again, above all the moving averages, the trend is your friend. That was a pretty good reversal on pretty good volume. Can the reversal be reversed? Absolutely. What's the next objective that they're likely doing, though? Well, there's a gap up above. Right over here, closing print is 529.81. That's an objective. Put it on your sticky notepad. And then what we would say from a charting, technical, realistic perspective, if they get above that gap and start trading above, closing above that gap, the only thing we have above is the breakdown candle high from the 23rd of May. And once they're up there, they're teetering once again with the trend line that was not hit the first time around. Remember, sometimes they come up short, other times they spike them through. On that day, on the 23rd of May, they come up just a little bit short of the trend line. Next time up, we would look for a spike through. If, capital I, capital F, there's a next time up. The volume on Friday has the makings of what we call institutional participation. Could have just been shenanigans at the end of the month. It's possible. But nevertheless, we take it at face value. Big time volume, reversal. Does that set the stage for a whole new leg higher? We don't have to exactly know the final answer to that question right now, but what we do need to know is it does set the stage to at least fill the gap above current price. Traders in the live room, inside the numbers, will certainly have numbers in and around that gap and above that gap for what will be, from an intraday perspective, overhead resistance. Since we had a close to the week and a close to the month for that matter, let's look at the longer term charts. And when you look at the weekly chart, even though it looked like they started to come down last week, but they didn't finish down, they finished on a very positive note. So what we can say right over here, not necessarily this candle one per se, but this area up here, they're eating time off the clock in a bullish formation up here. This is a bullish, flaggish situation, eating time off the clock underneath the big time trend line. Flagpole up, flag at the top, eating time off the clock. That's not bearish, that's bullish. Remember the purple trend line at 524.61. Let's not forget that. We'll put it back on the chart. Why? Because that is the breakout area. Former high, market was rejected, broke out above, tried to get the trend line, didn't touch it to the penny, came down to run a test of what? 524.61. We know all that from last week. As long as they stay above, on close, daily closes and beyond, as long as they stay above 524.61, she's eating time off the clock in a bullish, flaggish formation. Underneath 524.61, and of course you might want to write this down, put it on a sticky note, beneath 524.61, and there's a sell-off that opens the door, possibility for a sell-off where the door opens. 524.61 is our guideline. It is our line in the sand. It is, in the big scheme of things, Irene-ish. 524.61. We have a monthly chart. Last month, we could have had, not last month, but 2 months ago, the month of April, we could have had a reversal candle at hand. You could have called this a reversal candle. Didn't have tremendous volume, but reversal qualities nonetheless. What happened in the month of May? A reversal of the reversal. So what are they doing on the monthly chart? They're riding the trend line, eating time off the clock. Nothing more, nothing less. Nothing bearish on this chart. A little bit far extended from home base. What's home base? The 20-period moving average. Last time there was a test on the monthly chart of home base, it was October of last year. Net, boil things down a little bit. North of current price, you got a gap. The gap will normally be filled. She's bullish above the gap. If she gets rejected at the gap, as long as she's above 524.61, nothing wrong. Below 524.61, and Irene is heading upstairs to the bedroom. Above the gap, where's the gap? 529.81. Above the gap, opens the door for the breakdown candle high and the trend line and or higher. That's the schematic at present. What about Zim integrated shipping? Why are we looking at this? This was brought to my attention in the live trading room. Where's support on Zim? Here's a zone on Zim, 2084, 2043. Low of day happens to be 2043. So we'll issue a funny how that works. This was a real-time situation, live trading room. Keeping on with the live trading room, real-time trades that come up after the opening bell. These are in addition to the stocks on the move that we can see before the opening bell that are moving in the pre-market. Home Depot, 327.05, given to the live room. What they do at 327.05, they bounced off of it. Funny how that works. Same routine. How about Dell Technologies, 129.77. Low of days just under that. They bounced off of it, gave you the deal. Gave you several dollars. Look at the high in this candle, for example, 137.30. How about this area here, 134.30. Entry of 129.77. How you doing? Live trading room, real-time situation. By the way, have to make mention that the market had some technical issues today. Some kind of computer glitch, whether it was at the NYSE, whatever it was impacting certain brokerage platforms. It was impacting certain stocks, certain exchange-traded products. It was impacting the spiders, but not the futures, because the futures aren't traded on the NYSE. They're traded on the CME or whatever that is out there. We had notes, we had commentary, but what you'll see after the market opened midway through the morning session is I said, hey, look, there's technical issues. It's kind of a trade at your own risk situation because you can certainly get caught in a trade that you can't get out of because the market was busted for a while. Nevertheless, we had a pivot at 528.30 and a gap at 527.35. You could see pretty clearly, by the way, right of the vertical is today's activity, and you could see what happened early in the morning. They filled the gap right to the penny. The low here was 527.35. Funny how that works. Went right back to where? The pivot. Then they got below the gap, and then some other stuff comes into play, which we'll get to in the notes in a moment. But you could see the early stuff coincides with the early 0 dark 30 commentary. It's a pretty good wake-up call right out of the chute. You have the immediate layout, the early schematic. At 9:15, we're talking where's the setup. We were willing to short the tape if they got them higher. They never got them higher today. And the bear case was staying below X is what? Fill the gap at 527.35. And if they're below, the next number down is 526.75. Pause the video, read the notes, go back to the chart to double check the work. It's all in here, everything you need from a numbers and commentary and understanding perspective to trade successfully in the market using the ES, the SPY, options on the SPY, options on the SPX, the triple and double leveraged that follows the SP 500 or leveraged SPX, all that stuff, SPXL, SPXS, all that stuff. Any of those vehicles can be used to trade the S&P using my information, the numbers, the commentary, the what ifs and thens. By the way, back to the daily chart of the spiders. One more thing that you'll notice. What did the market do today on the downside? They did about give or take, a 50% retracement of the range, which was rather large from Friday. The low on Friday was 518.36. The high was 527.50. Just eyeballing it, didn't run the numbers, didn't run the math, but it looks like around a 50% retrace. We'll issue a funny how that works. Anything different going on over here in Camp IWM? You notice anything different? So Camp IWM didn't recover today. They don't have a big tail like the spiders do. Go back to the spiders and you see there's a tail today. They finished not at the highs, but near the highs. They had a rescue/recovery operation. You go to the IWM, that's my favorite market leading indicator, and say, well, wait a minute. They gave up after recapturing on Friday. Today they gave up the 20-period moving average, didn't finish anywhere near the highs, actually finished poorly. This is either still running the case for higher lows over here, that's fine from a technical chart perspective, or is this being rejected at a breakdown candle high and we're going to see the market trade lower next? Well, we know one thing. If they can't recapture the 20-period moving average on the daily chart, that's not a positive, that's a negative. One day at a time, one candle at a time, but it's information that we need to know. It's a puzzle piece. We're trying to do is build a puzzle with the different pieces that Mrs. Market gives us each and every day. The more pieces she gives us, the more clear the picture becomes. We're able to take action, whether it's from a day trading perspective, a swing trading perspective, both. The clearer the picture, the more likely the profits. The more muddy the waters, the likely the losses. When you don't know what the market's doing, when you have no idea, can't make heads or tails out of it, can't make a case one way or the other, guess what you do? You keep your money in your pocket, you sit on your hands, you take the batteries out of your mouse. You do nothing until things clear up. Weekly chart, same routine as the spiders. Eating time off the clock, above all the moving averages, nothing wrong with this chart. Different from the daily. The weekly's different from the daily. The monthly's different from the weekly. The hourly's different from the daily. The 2 hours different from the daily. The 5 minutes different from the hourly. These are all different charts. All charts act and react the same way, but the larger time frames will have a dominant pull. Maybe not today, maybe not the first half of today, maybe not in a 5-minute, 10-minute, 15, 20-minute span. The bigger picture, the bigger the time frame, the more likely that is the dominant pull. Write that down, put it on a sticky note. Everything morphs from smaller time frames onto larger time frames, but you can derive the picture using the larger time frames and scaling down to figure out what she's doing at present. Is it coincide with the larger time frame, or are they doing something of a divergence that we can be aware of? How you doing? You like them apples? Nice 2-day rally last week in the transports after getting bludgeoned, making a new low. Thursday, Friday were up. Today's a give back, still below all the moving averages. Therefore, that was a retest of the 20-period moving average, and thus far, a rejection. Trend is your friend below all the moving averages. Now you look over to the weekly chart, you see anything different? Well, they're in no man's land a little bit. They're below the 20 and the 50-period moving average, above the 100. Tested it last week, ricocheted off of it. Yet this isn't bullish still, this is bearish, and it'll be bearish until they can recapture the last breakdown candle high in the sequence, right up here around 15.5 and change, and that's what we'll use from a weekly chart perspective to gauge whether she's bullish or bearish the market, meaning the transports. Buttigieg's crew. What about the Q people? Let's look at this objectively. Last week, spiked the 20-period moving average, ricocheted off of it, filled a gap in between also. Right over here, you had a gap, so they took care of everything in one day for the most part. Friday, they spiked the moving average, they filled the gap, they ricocheted right back up, closed above the 20-period moving average, giving the impression that that was just a shakeout. It's a bullish situation above all the moving averages. The trend is, in fact, your friend. Run another test of a little bit of a garden variety retracement today. Staying above all the moving averages. Yep, you got it. Trend is your friend. Nothing wrong with this tape. This is a pullback from new all-time highs. No change. Weekly chart, eating some time off the clock around the same highs. No change. No new information. nothing bearish on this tape whatsoever. That's the current view. Be the umpire calling balls and strikes. What about the financials, XLF? If the financials are not falling apart, nothing generally wrong with the overall structure and underlying theme of the market. If there's trouble in the financials, we're going to take heed. We're going to add it as a puzzle piece on the table. Right now, they've given up, tried to recapture, and haven't been able to do so just yet. The 20-period moving average, which is the last moving average line of defense. So, in the big scheme of things, in the bullish case, if they can recapture the 20-period moving average, she turns into the bullish situation. It's not really bearish right now. When you look at the weekly chart, above all the moving averages, trend is your friend. This is a pullback from a new all-time high. No revelation. She tested a breakup candle low last week with this big tail. What am I talking about? Right here. It's in the course, Lazy E-mini Trader. That's a breakup candle low. And on Friday, there was a dip down. This candle here was showing up on the weekly chart, also shows up on the daily chart. All she did was run a test of the breakdown candle high. Nothing more, nothing less. Big picture, weekly's dominant to the daily, staying above all the moving averages. Trend is your friend. You got higher lows, give up last week's low, which will also give up the 20-period moving average. Technical Trading School 101, that's where trouble enters the room. That's when Irene starts to climb up the second flight of stairs. What about Smashmouth, the Philadelphia Semiconductor Index? Anything wrong here on the daily chart? No. Above all the moving averages, trend is your friend. 3 or 4 days of pullback, put in a tail above the 20-period moving average, right back up today. Weekly chart, is there anything wrong here? Well, you have a topping signal, right? This could be construed as a sign or signal of a top, but I don't do that. But some traders will look at this and say, because it made a new high and was a red candle, it's a reversal candle. Well, that's farthest thing from the truth that you need to know. That is not the case. When I look at this and I say, look, they're eating time off the clock in an uptrend above all the moving averages, maybe a little extended from home base. Maybe she has to come back toward home base. Maybe eat some time off the clock and let home base creep up to price. Those things are fine, but there's nothing technically wrong with the SMH. She's bullish. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.